Good morning, guys and girls. Thanks for joining me on this webinar with Apex Trader Funding. Quite a few traders sign up, so I'll give it a minute or two more before we start. See if I can see the chat here. Can you guys hear me first and foremost? You can type in Y or yes or something. Can't see any responses. It sounds like my room can hear me, so I'm assuming you guys can hear me. I don't see anything in the chat here, so which could be a problem if you guys want to ask questions. So I don't know why that's not. I'll work on that. All right, this will be recorded as well. I will probably post the recording on Twitter. If you don't get it, you can send me an email as well. All right, let me make John the presenter here. All right, so John's I'm gonna make him presenter. I'll chime in if you guys can still hear me here, and then I'll tell a little bit of my story, and then he can take over. John, you there? Could you hear me?
Yes, sir. I can hear you. Can you guys hear me?
Yep.
Perfect. Okay. I think I've got the screen here.
Yeah, I can see your screen.
All right. You see the PowerPoint slide there?
Yeah.
All right. Let me get the, let's see. I don't think I'm seeing a questions tab either.
Yeah, I don't know why it's not. Actually, I see. Yeah, I see. There's people in here. You can see it. You gotta like expand it. I can definitely see people responding. Hold on a second here.
Let's see.
If not, I can read them to you as well.
I see the chat. Normally I, Sharing. Yeah, normally I can see a the questions tab. I'm not quite seeing that here today.
Strange, because I made you presenter.
Yeah.
Do you see the control panel?
Yeah, I've got the control panel. I've got everything here for that. Just not a questions tab.
So it should be right. I popped mine out, but it should be under the attendees.
Yeah.
Strange. Well, worst case scenario is I can read them to you, but we'll probably wait to the questions anyway, I'm assuming, correct?
Yeah, and most questions will get answered there. Let me try. Yeah, that's strange.
I'm not sure. Yes, the recording, there will be a recording of this, so I'll post it Twitter and my trader room, and you don't see it there or at Twitter, you can send me an email. All right, so let me, I'll go over a little bit of what I've done with Apex, and then you can kind of take over if you want to do it that way.
Yeah, whatever works for you. I'm here to help.
Okay, cool. And then also, if you hear some chirping in the background, I have my book map alerts. They may go off if something happens, so hopefully that's not too distracting, but I can't turn them off unless I shut down my book map, and then that won't work either. So apologies if that happens while you're talking. I'll try to turn it down, but the problem is if I turn it down, I turn down my whole system and I won't be able to hear you talk either. So,
Totally understood.
okay, cool. All right, guys. Well, thanks for coming. I get a lot of questions in my room and through email about, different funding, trader funding programs, companies, so on and so forth. And I actually have an experience with one. I'm not going to name any names, but I did one. I'd say it's 2013, basically right before I got knocked out of the business. Most of you guys know my history was, multi-million-dollar scalper, and then overnight couldn't make a dollar, hung on for, a few years longer, and just could not, do anything that was better than average at best. And I had to leave the business in 2013 because I had two little girls to support, a family to support. But I did do a funding program right before I exited and went into medical sales for a few years to support myself and my family. And I had a very, I don't want to say bad experience, but it just was not what I expected. And I was just not, it was nothing I would recommend, put it that way. So I did the tryout, the evaluation, combine, or whatever you want to call it, right? So back up a little bit. So you guys have to realize, the business model of most of these funding companies is to take traders' fees to do the evaluation, right? Because it's good business, right? It's just like The Godfather. It's not personal, it's business, right? It is a good business model because 95% of traders fail, right? So, and I understand that aspect of it, right? But I also don't like when these funding companies portray themselves as wanting to fund traders as opposed to just collecting fees, right? So back up to when 2013, I did this funding, I did the tryout, and I passed it. And the minute I passed it, then they sent me an email, or first of all, there was no email. I had to contact them to find out what the next steps were. And then they tell me, oh, now you have to do a live tryout. Well, I'm like, well, what did I just do? I thought that was a live tryout. I passed all the parameters. And the other thing too, is these companies, and this is part of their business plan, right? They make it so hard with so many ridiculous rules that it makes it almost impossible to pass the combines and the programs. It's not impossible, right? I did it in my first or second try, but it is still very, very difficult, right? A lot of things are ridiculous. But on the other end of the spectrum, a lot of the things help make you become a disciplined trader, right? And that's very, very important, especially if you're trading someone else's money. I mean, if you go to a trading firm, you're going to have the same type of requirements, not that stringent, but you're going to have, daily drop downs, and or you can't hit a certain amount. I know Apex doesn't have a daily drop down, but we'll get into that a little bit. But you can't have a drawdown past a certain amount, things like that, because think about it, if it's your money and you have people trading for you, you don't want them blowing up and blowing out your firm, right? So, back to the combine or the tryout. So I did that and passed it. Then they told me I had to do something else, passed that, and then I finally got funded, and it was like, okay, now you can lose, $1,000 and you're done. I'm like, well, you can't, and this was before micros as well. So it's like you can lose $1,000 trading on one lot in ES. I know very well my very first day trading in 2001, I lost $2,500 trading one light. So that is not hard to do, right? Losing $2,500 is hard to do, but losing $1,000 is not hard to do. So my point is, I did this, and I just got a bad taste, with this funding company, and they're one of the only ones around back then, where they were just looking to make money from traders for their evaluation fees and stuff like that, and they really weren't interested in funding real traders. And I still feel like that with a lot of these. I haven't really looked into a bunch of them since then. I've had recommendations. Some guys in my trading room talk about certain ones, and I've looked into ones, and I never felt comfortable putting my name on one or backing one, right? So then I was introduced to Apex. I was on a webinar a few months ago from a very reliable guy I do business with in the trading industry, and I got the email for the webinar, and first thing I did was text him and say, hey, is this legit? Because again, I have not a good history with trusting these companies, and he told me this is the most, he's been in the business for 20 plus years as well. He said it's the most legit funding company that he's seen. So I got on the webinar and I listened to it, and went through their website, frequently asked questions, so on and so forth, to learn what their parameters were. And I thought it was a lot more less stringent as far as what needed to be done. And, basically what it looked like to me is they were interested in funding traders, and that's the most important thing, right? So, so I did the trading, I did the program, and so this was maybe 2 months ago, 3 months ago, I did it. And very first one, I was profitable, and I was aware of the drawdown, but I wasn't really aware. I didn't read this, and this is what this webinar is for, to help you guys understand the rules, right? I thought I knew, but I didn't know, right? So the first one I did, I was profitable. I think it was up 7,000. I did the $150,000 account, and you have to make a $9,000 profit. I was profitable. I was up 7,000, and then I had a drawdown day, which happens all the time. That's what trading is. Trading is percentages. You're not going to make money every single day. So I had a drawdown day. I think I lost like $1,500, and then I had another drawdown day. I lost like $2,000, and then I had another one, and I had drawn back. So for this particular program, you can lose back $5,000, or else you're out of the program. You have to do another one. And I drew back the $5,000. I was still profitable, $2,000, but I was out of the program. I'm like, okay, I guess I have to factor that in, in my trading. Again, and when you go live, it's a way for them to protect themselves too, even though it's not as stringent as far as the drawdown. Once you get over a certain amount, it's not always a $5,000 give back. They'll go into that, I'm sure. But the point is, I drew down, had to restart it, did another one, did it again. This one I was up like $6,000. Had a couple of drawdown days, gave back 5,000. Actually, it wasn't even that much. So the one thing, and we'll talk to John about this, the one thing that I did not like about it, and I'm going to be very honest with you guys, what I like, what I didn't like, because that's, again, I'm not going to put my name on something that I don't believe in, and I'm not going to sugarcoat anything, right? The one thing I didn't like about it, and John will be able to speak to this as well, is your drawdown is from your highest point of your P&L, not when you close out the trade. So there was a lot of trades that I had on that were big winners, and the way I trade is I'll give back some, so on and so forth, with at least part of my position. So it's not marked from day to day, it's marked from the highest point of your trade. So my drawdown, like on the second one, I think I only lost like $2,800 back, and I blew out of that one too, because my highest point of my P&L was the 5,000. So hopefully that makes sense. Again, I'm sure he'll explain it to you. So then I did another one. This is all within a week or two. Then I finally, I'm like, okay, I gotta, once I start getting.
Stocks July stock.
Pardon.
178 contracts.
That's what I'm talking about. You might hear that a couple times. So I got to the, so my third one, I said, okay, I got to be really cognizant of the fact when I get close to my profit goal, I can't be putting on, I wasn't even trading big, right? I was trading like I would trade live, like I'm doing now. I was only trading 2 or 3 lots, but even then, you can't trade a 3 lot in the ES with this kind of volatility. You will give back $3,000, $4,000, $5,000. So I was very cognizant of the fact once I got close to my profit goal, okay, you're only trading ones, and there was a couple times I actually even traded micros because it was so volatile, just so I wouldn't give back $5,000. So lo and behold, I qualified, and now I'm active on one of the accounts. I'm up like $3,000 on that one. That's the live one, and then now I've opened up another two other ones, and this is going to lead me to my next point of this is I opened up 2 other ones just to work on different strategies, right? So because I only have so many accounts that I'm willing to practice on, right? Like even if it's a micro, I don't like losing money, and that gets me to the point of doing these combines in the first place, right? So a lot of people can't trade quote unquote paper trade, right? So if you just bring up a simulator like on Bookmap or whatever program and you're trading, yeah, you can play your rules, but for a lot of people, it does not feel the same, right? If you're paper trading, it doesn't feel the same as when you're trading live because you don't have anything at risk, besides your pride, right? And for me, it doesn't matter what I'm doing. It's about being right and wrong, but not all traders feel that way. So by doing a program like this, just if it's to help you practice and have some skin in the game where you're learning, kind of like I'm doing with these other two practice accounts that I'm trying to qualify for, where I'm working on new strategies, it at least helps you, work on your strategies, learn to follow your own rules and things like that and follow their rules where you're not risking your trading account, right? I mean, you go through a drawdown, you can blow out a trading account in a couple hours, right? So when you do these funding programs, and that's across the board where you still have some skin in the game because you do have to pay for the fee to do it, and then there's a monthly fee as well, but it is nothing compared to blowing out an account, right? So there is nothing wrong with doing one of these combines to practice, to get better, to work on different strategies where you're not risking accounts. And then, if you do well, then all of a sudden now you're back for real money. You don't have to risk your own money when you're trading, right? And that's one of the other advantages. When you trade for a trading firm versus on your own, or someone who's willing to back you, it's a whole different ballgame. When you're trading on your own and you're trading money that you live on, you do not make the same decisions. I don't care what anyone says. If you are worried about paying your rent and you're pulling out money to pay rent, I'm sure there's many people on here that are doing that right now. Pay your car payment, whatever, out of your trading account.
July ice for itself.
You just don't make the same decisions emotionally, because you're emotional, because you don't want to lose money. And that just is a trickle down effect where you're staring at your P&L and you're not following rules because you're afraid to lose. That is one of the other benefits of doing something like this, is if you do well and get funded, you can trade with a free state of mind where you're not worried about paying your rent. So that's one of the other reasons. And practice, skin in the game, and then you don't have to trade your own money. So back to the Apex. So I qualified, and one of the things that, again, I did this more for my community, my traders. I always take a trading account, right? I already have like 4 or 5 of them out. I'll add a couple more, great. Especially if I'm able to trade with bigger size and somebody else's money, right? But one of the reasons I did it is to prove to my traders, and show them, hey, this is legit, right? Because again, I'm not putting my name in anything I don't believe in. So I did it. Remember I told you the first trading combine or tryout, whatever, that I went through, it was just a big game. I wasn't contacted. I had to contact them. Oh, you have to do a live account, so on and so forth. So once I did qualify for Apex and I'm not saying it's going to be this fast every time, because obviously they're overwhelmed with traders a lot of times qualifying and stuff. But within 1 hour, I received an email that said, you're live, you're ready to go. So that alone was like, okay, this is working, right? This is something I can recommend. So to this date, I have not been paid actual funds yet, because you have to trade, and he'll go into these rules where you have to trade 25 full trading days. I think I'm on like 19 or something like that, 17 or 19 days. So I haven't actually been paid yet, but trust me, I'll let you know if something happens and they don't pay, but that's not going to happen. But again, I just haven't got to that point where I've traded that many days yet on the live account. So that being said, I just wanted to give you guys a little background and why I decided to do this webinar, to introduce it, because again, I'm not going to put my name on something I don't believe in. And I think this is legit. I think this is a great way for you guys to, really get in the ball game and start trading some decent size. And, as your account grows, you can trade bigger, bigger, bigger. You guys all know my story. I started out trading 1 lots back in the day. And by the time all of a sudden done, I was trading, 3,000. I can put on 3,000 at one time. So it is doable. It is doable to build your account from trading 1s and 2s, right? So that's what you guys should be striving for. So all that being said, John, if you want to take over, I'll just sit back and listen. We'll wait to the end for questions, but you just let me know when you're ready for some if you can't see them.
Yeah, man, I tried to play with every setting here possible. I'm not able to see any questions, and I'm only able to send chats to you. I wonder if it's whatever level you gave me, although it shows presenter. So I'd love to be able to see questions.
Try one more thing here. Maybe if I make you an organizer. If anybody knows, by the way, if you guys are go-to webinar experts, feel free to chime in.
Normally I thought presenter would do it, but yeah, even in chat, I'm not even able to chat with the entire group. Let's see here. I'd definitely love to be able to see questions.
So if I make you an organizer, I just hoping it doesn't kick you. You want me to try to do that?
Yeah, let's try it. It shouldn't.
Okay.
Shouldn't kick either one of us.
Okay. Made you organizer, so you should be.
Got it. Now I see the question. Okay, now we're good.
All right, I learned something today. That's good.
Perfect. Well, me too. I thought normally that would work. It's always worked in the past for me too. Okay. Well, now we are good here because this will be much easier being able to see questions. So, okay, so everybody can hear me. Everybody sees the screen there with the PowerPoint slide. Little audio video check there. Everybody good to go? Perfect. Okay. Well, guys, I appreciate y'all being here. Scott, I appreciate you having me here. And I like to be pretty interactive here when I do webinars. So definitely please use the questions box there to ask questions or to answer questions that I may ask. And I'm sure you have a lot of questions. I'll try to, 90% of your questions will kind of be covered in one of the next sections I'm going to go through. So if you'll just bear with me here through a couple of these sections, we'll get to most of them, and then I'll show you, Scott had even mentioned in our FAQ, I'm going to show you exactly where you can get all of your questions answered. But yes, my name is John Skelton with Apex Trader Funding. Let's go ahead and, as always, knock out disclosures here. Trading involves risk. Make sure you know what you're doing before you do it. And I really appreciate everything Scott just had to say. Honestly, Scott, you took half my webinar, which is great. I don't, you know what? I don't want to be here to really give you guys like a big long sales pitch. That's not really what I'm here to do. I'd like to make this a little more educational, and really, Scott set me up there. I want to kind of help you understand, what is this whole trader funding thing? What is that all about? Like, what is it? How does that work? What's the catch, right? Why would a company get behind me and fund me as a trader? And I want to educate you a little bit on the industry. And then I mainly want to educate you. I'm going to follow with Scott here. You know, we're not the only rodeo in town. Apex Trader Funding is not the only company out there that does trader funding. There are several others out there. I'm not going to mention names or badmouth particular companies, but there are some companies out there that Scott mentioned, they're just there to collect fees. And I want to give you a little bit of understanding of what you want to look for and what you want to look out for when it comes to trader funding, okay? So does that sound good? Just a little bit of education, helping you understand what this is all about, how it can work for you, and we'll take it from there, okay? So let's start by just kind of setting a foundation. And I want to make this about you for a minute to help you really understand. So let me ask you a question. Those of you that are traders, how many of you over your trading career, trading path, how many of you have ever subscribed to a trading newsletter or like a day trading plan or an auto trading system? How about signals? Any of you as traders ever subscribed to any of those? Newsletters, day trading plan, auto trader, or signals, or maybe you're in an education group and you're in a live trade room, right? And you're wanting to follow along with a trading guru in there, okay? Basically what you're doing there is what? You're looking for someone to follow. You're looking for someone that you can entrust your trading decisions to, right? Or someone that you would be willing to entrust your live money with. Yeah, I mean, that's what you're looking for as a trader. You know, maybe you reviewed their website and they had these historical stats about, hey, if you followed my trading signals, here's the profit, here's the trades I won, here's the trades I lost. And you hope those historical stats are true and accurate, right? I mean, let's be honest. Any of us can go on right now and make a spreadsheet of historical stats, right? And make them up. You're hoping this person's history was legit. But would you feel a lot better if you could say, okay, I want to watch this person trade in a simulated demo environment with certain rules and watch them trade for a few weeks and see it for myself. Day by day, day to day, see it for myself. Hey, they really can trade. Hey, they really do have a system. Hey, they really do have good risk management, good rules. I can see that. That would make you a lot more comfortable seeing that over a few weeks, as opposed to, oh, here's a historical stat that I made up on a Excel spreadsheet. I mean, you guys all agree with that? That'd make you a lot more comfortable to say, okay, I see it myself live over a few weeks period every day. They've got it. Now I'm a lot more comfortable following that person with my own trades, or a lot more comfortable letting them trade money for me, or whatever it may be, right? Especially if you could see it over a few weeks, you know, because hey, maybe there's some trending days in there, maybe there's some range bound volatile days, maybe there's some news days. You've also watched them adjust to different market conditions, right? And that would make you a lot more comfortable to say, yeah, I want to follow them, or, you know, do a profit split with that person, or, you know, follow them and trade myself separately. You've all done that as a trader, correct? Like y'all understand that mentality, that reasoning of what you're looking for. Well, that's no different than how it works for a trader funding company. Because like I said, that's one of the biggest questions here, right? Is like, why would a company do this? What's the catch? What's the real deal here, okay? Because that's what trader funding is, okay? Yes, a couple of you have asked, because I don't want you running to our site and signing up here and spending money you don't have to spend. Because yes, at the end, Scott and I have talked, we're going to give you a big, huge discount and savings and coupon code. So don't run and sign up for anything. Hang tight. Yes, this funding is for futures accounts only. We currently don't do funding for stocks or crypto or Forex, but it's very simple. Prove that you can trade consistently and profitably without massive losses or drawdowns, and then qualify for what we call a paid performance account, a funded account. At that point, we do offer a split of 90-10. The trader keeps 90%, we make 10%. That is how we make money on the back end, okay? So why would a company fund a trader? So, you know, let's be real, right? You're saying, all right, John, this is a great little presentation, but if your company has money, and if your partners have money, and if your funding backers have money, and if your prop fund backers have money, why aren't you just trading it yourself? Why are you looking for other people to get behind, okay? Well, sure, someone can go in and trade it all themselves and put everything into one trade or everything into one system. But what do we know if Scott even touched this, right? Yeah. No matter how good of a trader you are or how good of a system you are, you have up days, you have down days, you have several down days, right? Certain systems work better in certain markets or certain market conditions, okay? But trader funding company, a true trader funding company, is looking for those consistent traders to bring in consistent profits and do a profit split and have different markets traded, different types of traders. We don't require that traders trade a certain system or a certain strategy. You don't have to go through some kind of training. We're not looking for everyone to trade the same system, right? We want diversity. We want duplication. We want to spread out the risk. Some people trade indices. Some people trade, you know, commodities and gold and oil. We've got people that trade, you know, lumber or cattle. Some people trade the day, the open. Some people trade Asian session in the evening or Europe overnight. It spreads out that risk, right? It spreads out those funds between different traders, different strategies, different systems, okay? So now let's kind of flip it. So that's what trader funding is. That's why a funding company would be looking for traders. But what about for you? You know, because one of the first questions is, okay, that's great. 90-10, but why would I want to give up 10% of my trading profits? Okay. Well, there's a lot of people out there that are interested in trading. They're learning how to trade. They're watching YouTube videos. Maybe they're involved with an education group, but they don't have enough funds to trade. They don't have enough funds to open an account, or maybe you have an account, but you don't have a lot in there. So you don't have enough funds to trade the size you want or the number of contracts you want, right? So that's one of the big benefits of doing a funded account. Or this is a big one for a lot of people, right? Nervous about risking your own savings or your own retirement or your kids' college funds or whatever it may be, especially right now. Like, you know, or look over the last 4 to 6 weeks of trading. Look how volatile some of the markets have been. Who, just quick show of hands, who in here, for example, trades NQ, the NASDAQ? Any of y'all trade NQ? Scott, I don't know if that's something y'all trade in your room or.
Oh, yeah. Yeah, we trade. I just actually posted a screenshot of a potential trade right before we got on.
Okay. So if you've traded NQ over the last 4 to 6 weeks, you understand the word volatility, right? That thing can move like crazy out of nowhere, right? And just boom. I mean, especially a few weeks ago, I mean, in the mornings, you know, you're talking just a couple of minutes, it's just like hundreds of ticks one way or the other. It's fast, right? It can be volatile. If you're wrong, it can go against you quickly. You got to manage those trades properly. So when it comes to risking your own savings and being in some of these, you know, volatile markets, that can be a scary thing at times, right? And blowing your account, which doesn't just mean blowing a random trading account, but possibly blowing your savings, your retirement, you know, stuff for your family. How many of you have seen over the last 4 to 6 weeks some of those days where things were crazy and the margins increased, double the margin, right? So now all of a sudden you can only trade half the contracts you were able to trade before, especially if you had a smaller account. Okay, so these are all some things that most of you have probably encountered at some point or even very recently with some of the market conditions, right? And, you know, let me ask you this. How many of you, like Scott mentioned earlier about demo trading? Like you're demo trading, you're in a simulated account, you're testing out some strategies and systems, you're doing pretty well, feel like you're starting to master it, starting to be profitable, you're doing good, right? Anybody been there? Then you say, all right, it's time to go live. And as soon as you switch over to live, what happens? Suddenly it all changes, doesn't it? You're not doing as well. How did you go from being profitable and growing your account to, oh, I switched over to live and then I blew my whole account? Have any of you had that happen? Come on, I know if you say no, you're lying, because we've all done it. I've done it. Why? Because your mentality totally changes when you switch over to real live money, right? It's scary. It's scary about losing real live money or your own real live money. You hesitate to press that button, or you press it too early, or you're down, you lost a trade and you got a revenge trade just to get back. It totally messes with your head mentally, doesn't it? That switch over. That's a big dang in trading. And, you know, a lot of top traders, you know, or institutional traders or other people, hedge fund traders, they're not trading their own money. They're trading someone else's money. But it creates a whole new mental outlook and helps take away a lot of fear and bad decisions when you can overcome that aspect. Okay. You guys remember, how many of you, like when you were brand new to trading, you just first started trading and you thought it was like you didn't see your family for weeks, you didn't have a life for weeks, you didn't sleep for weeks, because all you were doing was looking at a chart and back testing and market replay and adding on another indicator and adding on another indicator and 4 more indicators. And if they all do this, what happened? If they all, it was all about finding this magical holy grail system, right? Oh, this is great. Oh, it had a bad day. Let me switch it up all around it. And that's all you thought trading was about. You were going to master it. You were going to overcome it. You were going to find some magical combination of indicators that no one before you was able to do, right? And then you hear people talk about trading mentality and trading psychology and mind map, and you're like, I don't need that. I don't want to read a book about that. I don't want to watch a video about that. I don't need that psychobabble stuff. I just need to figure out this magic indicator. How many of you were there and felt that in the beginning? Till you blew a few accounts. Till you realize after a while, oh, you know, there is something to this mind mastery, to this trading psychology, to this risk management, being disciplined, right? And you start to realize that's actually a huge part of trading. And it takes you a little while to get there and really kind of understand that, doesn't it? So those are some of the challenges and needs and why traders would be interested. Here's what I want you to really pay attention to, and Scott talked a lot about this, because guys, this is what it's all about right here, all right? Some of you have, and I'm not gonna mention names either, but some of you might have tried some other funding companies. I've done it in the past before, you know, before we started Apex Trader Funding. Myself and some other top traders in a group we were involved in, we were trying to find some of our trader friends some funding. And we went out and tried all these different companies. And even us as the top traders, we could not pass the tests. We could not pass the evaluations. I have no shame in telling you that, because they had so many rules, so much fine print, okay, that they're just there to take the fees. Why? Because you sign up, you take an evaluation, you pay for it, and you fail it. So you pay for it again, and you fail it. You pay for it again and fail it, right? You get that? You see that? Okay. So there's a difference of a company that's there to just get you to pay fees versus a company that's there to actually create an opportunity where traders can get funded. And I'll tell you that one of the big differences is that there's several of these trader funding companies out there that have no plan whatsoever to ever fund a trader, much less pay out a trader. They also don't have backing. They don't actually have true backing, okay, to actually get to the point of making a consistent 10% profit split off of traders, which, as you can imagine, if you can find a good number of good, profitable, consistent traders making 10%, that's a pretty darn good return, yeah? Okay, so that's really what you have to ask yourself. When you're looking at these different companies and you're looking at these rules, let me give you a couple examples here. There's one company that says, you know, and it sounds good at first, okay? They say, look, we want to protect the market, and we want to protect the liquidity of the market, and we want to protect against HFTs and high frequency scalps. That sounds good, right? Like, oh, this company cares. So that being said, because we want to prevent super scalping, you cannot be in a trade less than 5 minutes. Or one of them says less than 3 minutes. Oh, okay. Okay, I'm sorry. Didn't I just ask you how many of you trade the NQ? Let's talk about what the NQ can do in 3 minutes.
That's pretty funny.
I mean, seriously, right? What can the NQ do in 3 minutes? So let me ask you a question. This is the question you need to ask yourself. It's very simple. When you're comparing these funding companies, it's this simple. So let's say that you have $100,000 sitting in your bank account right now, and you're looking to do something with it, with your money. I come to you and I say, hey, Scott, I can trade. I'm a profitable trader. Give me access to that 100 grand, Scott. Well, I don't think Scott's going to say, oh, here you go, right? First thing he'd probably say is, well, prove it a little bit. Okay, let's get a demo account. Let's set a few rules. Let me prove it to you over a few weeks that I can trade. Maybe then if I can prove it to you, Scott, you'd be comfortable letting me trade it and we do a split, right? But
Absolutely, and that's what people don't understand. I mean, any even firm today, like, again, when I got back in the business, I was going to trade stocks. I was training with SMB. They're mainly a stock trading firm, and
yeah,
even with my history, people don't care, and by good measure. I mean, it doesn't matter what I made millions of dollars, big deal. That it's what have you done for me lately in this business? So you can talk and say how great you are. Well, if you're that great, then prove it, because no one is going to back you, anybody on this planet, unless there's something wrong with them, without proving that you can actually make money. Talk is cheap, right? Again,
yeah,
I make a lot of money and it doesn't matter now, right? I've got to, you have to prove yourself in this day and age. And there is no firm that I know of that is going to hire you off of a resume, off of what you did in the past.
correct. And like you said, for one, it's what have you done for me lately? But for two, hey, you used to make, I come to you and say, oh, I used to make all this money and I did. Well, what happened? And did you lose it all? Did you blow an account? Where's your mental state right now? Can you still do it? So prove it. But so that being Scott's money, or any of y'all, right? That being your own money, you would probably want to put a few rules in place of the way I could trade, because you want to protect your money, right? Everyone would. So let me ask you this. If you got 100 grand in the bank, you're going to give me access to trade it. And you say, now, John, don't be in any trade for less than 5 minutes. Okay, so I think the NQ is going up, so I buy it. 10 seconds later, that thing starts shooting down hundreds of ticks. Well, I'm just going to sit on my hands for the next 5 minutes, let this thing go against us thousands upon thousands upon thousands of dollars, because you have that rule. Does that rule make any sense whatsoever? Like, is that a rule that you would put on someone trading your own personal money? No. That is one of the easiest ways to blow that account, lose that account, right? Okay. Jay, like I said, I'm not going to talk bad about, I'm not going to mention names, just like Scott said, okay? But does that make any sense at all? Does that rule make any sense? No. It's literally designed there to what? Make you blow an account. My point is this. Oh, that same company has another rule of you can't be in a trade longer than 20 minutes. And they claim that is to, hey, to help make sure that trades are not left open and you walk away from the computer and forget about it. Okay. Well, okay, that sounds good. Like, oh yeah, you don't want us just leaving on trades and leaving and walking, and what if my power goes out or the internet goes out or whatever? I mean, some of you might trade longer term trending strategies. You might want to be in a trade for a long time. Isn't that something we always hear about trading? Like, manage your risk, but let your profits run. If that market is going and going and going and I want to go with it, why are you going to cut me off after 20 minutes? What are we leaving on the table there? right? If a rule does not make sense to you, you have to always put yourself in the position. If this was your 100 grand you're giving someone access to, what rules would you want in place? Any of these rules you would see from a company, if they make no sense whatsoever from being profitable trading, then the rule is there for no valid good reason. The rule is just there to cause you to blow that account. Does that make sense? Analyze it that way. Analyze our company that way. Analyze any company out there that way. Of, does this rule make any actual trading sense? Okay. Does that make sense? Like, I think that's a fair analogy, right? A very fair analogy. So let me just show you. I'm going to pull over our website here. I want you to understand a couple things. And again, don't go sign up for anything because we're going to get you a good discount here. But when you get over to our site, got some information, a couple of videos, but down here you start to get into the plans, okay? There are evaluation plans anywhere from 25,000 all the way up to 300,000 and everything in between, okay? Each one of these has different structures to them. For example, probably one of our more popular ones is the 50K. All right, so you can do 10 contracts, okay? And those are minis, otherwise you can do 20 micros. To pass this evaluation, okay, there's a profit goal of $3,000 and a trailing threshold, which we'll talk about in more detail here in a bit, of $2,500. So in a nutshell, can you make 3,000 without losing 2,500 trailing? And that's to pass the evaluation. So let's say that
you got to trade 10 days, correct?
Correct. So let's say that we use that same analogy. Scott says, hey, prove, okay, or let's look at the 100K because we've been talking about 100K, right? So Scott's got 100 grand. He's going to give me access to trade it, but he wants me to prove in a demo. All right, hey, so on 100 grand, can you make 6 grand? Okay. Well, if I go out right now today, Scott says, oh, go do it. And I go out in an hour, I come back to Scott going, oh, look at the account. I made 6 grand. So give me access to your money. Would any of y'all feel comfortable with that? If I came right back to you in an hour or two and said, oh, I made the 6 grand, give me access to your money. No, right? Because I could have lucked out. I could have caught a lucky run. I mean, my 9-year-old kid can walk in here and press buy or sell and be right 50-50, right? I mean, that doesn't make any sense. You're going to want to see a little bit of consistency there, right? Now, does that mean, and Scott mentioned this earlier, does that mean it's like, well, go and trade in demo for 2 months under these certain rules, and let's see if you can get past that challenge. And then if you do, I want you to do a secondary challenge for another 2 months, and that's going to be a little bit different rules. And then if you pass that, I'll get you into a like trial live account. And then if you do, okay, look, no one wants to see it done in an hour, but do we need to make you do it for 4 to 6 months, dragging out time, changing rules around? No, we don't need that either, right? What would be the reason for someone trying to do that? For that much time, changing rules around, switching it up on you. Oh, tried it, failed, pay another fee. Oh, try it, failed, pay another fee, right? Okay. So you don't need that. So let's talk about our rules. With our rules to pass an evaluation account is very simple. Hit your profit goal, just like we showed on the other page there. Don't hit the max drawdown. Simple enough. Don't hold trades past 459. This is the big one here. And sometimes people complain about this one. Oh, why is it considered a breaking a rule if I held my trade past 459? Okay, what happens every day at 5 p.m. Eastern time in the futures market? Closes, right? It closes. Then it opens back up at 6 p.m. Eastern time, correct? So let's go back to the analogy. You got 100 grand sitting in the bank, you give it to me to trade. I go and I'm 5 contracts long on NQ. 5 o'clock, I'm still in that trade, and the market closes. When it opens back up at 6 o'clock, anyone ever seen what's called a gap open? Where the market reopens like hundreds of ticks away? I think we've all seen a gap open, right?
Happens all the time, especially with earnings and with the
Yeah.
board. You know, even these things like crude and gold can gap. You know, from
Yeah.
that board.
I mean, there's gaps all the time. I mean, just last week, what was it, Tuesday? I mean, there was one evening, I mean, it was hundreds of ticks, Scott. You might know what day that was. I think it was Tuesday. Hundreds of ticks gap.
Yeah.
Times 5 contracts. How many thousands of dollars would that have been? Sean, you know what I'm talking about? Like, I believe it was just last week. There was a really big one at night. So again, if it's your 100 grand that I'm trading, would you think it's unrealistic to ask me, hey, John, can you just close that trade at 459? Don't hold that trade during that closed hour and put us at risk of thousands or tens of thousands of dollars. Look, at 6 o'clock, if it opens back up and the market's still going in your way, just get back in the dang trade. But don't hold through that gap time and risk our money. Is that a realistic rule that you'd probably put on your own money? Or is that a rule that's designed to get you knocked out and fail your account? It's actually the opposite. That's there to protect the funds on both sides, right? So fair rule, can anyone complain about that rule? I think it's a very fair rule. It's something you'd want for your own money. How about this? Don't give out your username and password to someone else. So, hey, Scott, give me your 100 grand. I can trade. Oh, okay. But I actually go give the username and password to some other dude, and they're the ones trading it during the test period. It's not even me doing any of the work. Oh, hey, looks like some trading's good. Now here's live money, and then I come in to trade it. If you're going to fund someone and get behind someone, you want to know it's that actual person doing the trading, don't you? That's very realistic to ask, right? And then 10 trading days minimum. What does that mean? Well, it's like we talked about earlier. Hey, if the profit goal to pass this evaluation is $3,000, you don't want me to run out and pop $3,000 right now on an account. That could be lucky that I could have caught a big run. But I don't also need to prove it over 6 months either, right? All we ask for is 10 minimum trading days. That does not mean it has to be 10 consecutive days. It doesn't mean you have to pass it within 10 days. It doesn't matter whether it takes 10 days, 10 weeks, or 10 months. We just want to see that there's 10 separate, different individual trading days that were traded during the evaluation, also getting to the profit goal, because that means that there's some consistency there. There's some risk management there. There's an actual strategy and system that can be followed there. And most likely over 10 different separate trading days, that trader has encountered some different market conditions, right? like Scott just mentioned, some news or earnings or a trending day. Does that make sense? Is that something are these rules you see right here in front of you realistic things that you would probably put these rules on your own personal money if someone was going to trade it for you? Because that's it. Those are the rules of the evaluation accounts. Any other crazy rules are just there to make it harder for you and to cause you to fail the account to pay it again. Okay? Does that make sense? Do those rules seem fair? You understand where I know I'm going on and on here, but I want you to understand when you look at any funding company out there, check their rules, check the fine print, and that's all you got to ask yourself. If it was my money, would I have this rule in place? And if you wouldn't, you need to figure out why. Okay, I think that's a fair filter test there. Okay, so that's it. There's no other fine print or complicated rules making it hard to pass. Can you trade consistently? And can you be profitable? And can you stay within drawdown guidelines? Okay, it's that simple. And we'll talk about that here in a little bit. So that's the process. You can qualify as little 10 days. You don't have to do these long drawn out processes. It's a one-step evaluation. You just have to pass it once, not do it again, not try it again, not try it again. Then it's not multiple steps, okay? So that's really the difference of fees versus funding. Are the rules that are in place just to get fees from you, or is there a true path to fund profitable and consistent traders for a profit split? Is it a long-term relationship versus a short-term relationship? Okay, so that's it. All you've got to do is go to the site, look at the different packages that are there, okay, figure out which one is best for you. Once you sign up, you immediately get an email with the username and password, the platform licenses, the rhythmic data feed, username and everything is right there. Plus, you have access to it in the back end. Okay. Now, let's talk a little bit about something real quick here. And Scott, you had brought this up earlier too, so I want to address it. So, a couple things here. And we'll talk a little more in detail here in a minute of exactly how this trailing threshold works, okay? But you'll notice with these different sizes of evaluation accounts that each one comes with different specs. So you can do different number of contracts, right, on each one, max contracts. Now, let me just throw it out there. Just because you can do these number of contracts doesn't always mean you should do those number of contracts. Does that make sense? Like, you can do those contracts, but maybe you should do less. Hint, hint, okay? You go max contracts, the more contracts you do and the market pulls back against you, the quicker you're gonna hit what? A trailing threshold, right? So just because you can do something doesn't mean you should. So people say, well, which one should I pick? What's the best one? Well, there's no such thing as the best one, and I can't even give you that answer. Scott, you talked a little bit about there was a couple of them that had pulled back against you and had popped you, and at first you didn't fully understand how the trailing threshold worked.
Right, yeah. Again, I thought, hey, I'm profitable as long as I don't go below, sub, the 150,000. I did the $150,000 account. In my mind, I'm thinking, well, as long as I don't go under that 150 grand, I'm good to go. I just didn't. It didn't register, even though I heard it. It just didn't register. And again, I didn't know it was from your top tick either. You're profitable during a trade. But yeah, I pull back again, just a regular drawdown, and I hit it because I wasn't cognizant of the fact it's not. You don't actually go under 150 grand. If you go up $8,900 and you go back to only up $3,900, well, that's a problem, but you blow out your funding.
Right. Right. Now, we do have a static account right here to where the drawdown is 625 and it never changes. Okay, it doesn't trail and follow you. Okay, but you don't have quite as many contracts. But okay, so which account is good for me? Well, only you can answer that because it all depends on your trading strategy or system. And Scott, I'm not super familiar with the system y'all use in your room, but an example here. Let's say that, oh, hey, I'm a scalper. I go for like 10, 15 ticks, that's it. So my stops are like 10 or 15 ticks. Like I don't have huge stops. Okay, well, then would a 50K account work for you where you've got a $2,500, threshold, or a $3,000 threshold? That might would work for you because you're not racking up big stops. Does that make sense? But let's say, well, my system's more of a trending system where I want to follow that thing way down. And so we all know a trend doesn't go from point A to point B in a straight line, right? It's going to go up and then it's going to pull down and then it's going to go up a higher high and pull it. So you got to take into account those pullbacks, right? I think that's where you were saying it kind of hit you, Scott, that first time.
Exactly.
So you have to look at your system and say, okay, generally what is the pullback that I get here, and then add in how many contracts do I want to do. So, maybe I need a bigger threshold, maybe I want the biggest threshold there is. And maybe I don't want to do 35 contracts. Maybe I only want to do 5 contracts, and have that bigger threshold. So the size of the account, the evaluation account, really depends on your strategy or system. Does that make sense? Because if you've got a system that's, I did a webinar for some guys the other day that have, they're looking at these, high of the days from the last few days to here, and it once the market comes here, they get it. But they had to have like 100 tick stops. You know what I mean? And let the market really play before it made its move. And okay, well, then you don't want to be having this right here, right? You need a bigger threshold. So that's kind of determined more on, your strategy or system as far as which one of these accounts, okay? So how do the fees work? For example, this 50K account right here, it's priced at $167 a month. What does that mean? Well, if I signed up right now, I'd pay 167 bucks. 30 days from now, that would renew for another $167. It'll renew and recur as long as I need it. Now, I might go in and pass the thing in the first 10 days, so I don't ever have a second charge, right? And again, don't go sign up for this because we're going to get you a big discount on it, okay? What happens if I sign up today and tomorrow I blow the account? I break a rule. Do I have to pay another 167? Do I have to wait a month? No, you can go in at any time and you can reset the account. Okay, you reset the account, it puts the account right back to the original starting balance, the original stops and everything. Okay. So like I said, some people will pass the evaluation the first month, never get a second fee. Some people say, hey, I want to take it slow and easy and take a few months. That is fine as well. Okay. Once you pass the evaluation account, and the evaluation account, well, real quick, what's included in this? And I'm skipping ahead a little bit here. This gives you the evaluation account with all of the software included that's needed for that. We have about 20 different platforms you can use it on. I'll show you that list here in a moment. NinjaTrader is our preferred platform that we provide data or support on, but you can use it on about 20 different platforms. This does include a Ninja license key. This includes the rhythmic data feeds. This includes everything you need. There's nothing extra you need to go buy or add on here, okay? But once you pass the evaluation account and it converts over to what we call a PA account, a paid performance account, where the 90-10 split comes in, then you're no longer paying this fee monthly for the evaluation because you've already passed the evaluation, okay? The paid funded account fee is $85 per month, okay? That covers the data feeds, that covers the platform fees, and that covers a wire fee for your withdrawal. That's it, okay? So that's
which is very reasonable, right? I mean, anyone who's paying for data knows, I'm powering my book map with Rhythmic. I pay $90 a month, right? So it's like that's not. I mean, you're including that. It'd be one thing if you're charging the fee and then you had to pay for data, which I think some of these other places do, these other
right.
firms. So I think it's very reasonable. Again, I would have that factored into my decision making as well. Back to you guys.
Yeah, I mean, once you're on a paid performance account, I mean, our profit that we are making, I mean, let's just be upfront. Okay, I mean, let's back up. Does Apex make money on fees? Absolutely, we do. We make money on the evaluation monthly fees. We make money on our reset fees. Of course we do, okay? But do we make money on the paid performance accounts? Well, we don't really make any money off this right here, like you just said, Scott. I mean, because we have to actually pay for that data. We have to actually pay for the software. We actually have to pay for the license keys, but we make the 10% split, okay? So there is profit on both sides for us, not only on the fee side. And you have to imagine when you get a pretty good group of good traders making some good profit every day, 10% does add up. I mean, it's a nice return, okay? So just kind of wanted to cover how some of that works. What are the platforms here? Like I said, NinjaTrader is our preferred platform that we are able to provide some support on, but it does work on all of these platforms here as well. Some people say, well, hey, I have my own data feed. Can I just use that? Well, the data has to tie into Rhythmic into our software in the back end that tracks the evaluation account with the rules in place. Okay, so it has, some other data through CQG or Sierra, whatever, won't work for that. It has to go through our evaluation software system. Okay, so do payouts reset the drawdowns we have? Garrison, are you asking about payouts in an actual like live account? No, let me explain something there. Give me a second, that's in the next section here, Garrison, and I'll explain that. Because one of the cool things about once you get to the paid performance account is that trailing stop actually stops at a certain place and you don't have to deal with it anymore. Okay, I'll show you that here. Okay, so that's how it works. Like I said, once you've signed up, you begin trading. You got 10 days of trading minimum. We've kind of gone through all this here. I'm gonna kind of I skipped ahead a little bit there. We talked about resets, how you can reset it. What are the payouts? Once funded, okay, the first $10,000 of payouts to the trader are actually paid at 100%, okay? After that is when we start taking our split. So the trader gets to keep 100% of the first 10,000, okay? Now, with the payouts, let's talk about this a little bit, okay? Rami says, what is the source of your capital? Like I talked a little bit about earlier, Rami, is the source of capital is actually a couple different sources. For one, we are self-funded as well as our investors, but we do also work with a couple of third-party prop funds, okay? And I think, Scott, you wanted me to address a little bit of that here, and I will as well, about how some of that works.
Yeah.
Very well backed there. So let me ask you a question, and I always take this back. I'm going to be very upfront and transparent here with you. Are we looking for short-term or are we looking for long-term relationships? We are looking for long-term relationships. Now, if a trader comes on and they're trading with us for 4 or 5 months and they say, I just want to withdraw everything and go do my own thing. Well, of course you can do that, okay? Overall, are we looking for that? Well, not necessarily, just like you probably wouldn't be either, right? You're looking for something long-term. Scott, I believe that you said something a little while ago about, and I had to step off for a quick second. I had someone walk in. Were you talking about people trading like because they had to pay a bill or they needed money, or were you talking about that a little while ago, like trading out of desperation to pay a bill?
Right. Well, I just said there's a huge monumental difference between your decision making when you're trading money you need to live on versus trading somebody else's money, right? Like, and again, when I left my trading firm in 2007, when I just literally could stop making millions of dollars overnight. I went from making millions to couldn't make a dollar and then started losing. Then I thought, okay, well, I have enough in my accounts, my bank account and everything else where I could just do this on my own. I don't need backing. It is a whole different ball game when you are trading your own money. It just is. Because again, you think of it in terms of, I just lost, that's my rent for the month. I just lost my car payment. I just lost this. I lost that. I lost my mortgage. You may think, if you haven't gone down this road before, that, oh, I won't do that. Trust me, you do not make the same decisions, because then what you do, and I tell you guys this all the time on the webinars, you start looking at your P&L. When you start staring at your P&L, you do not trade profitably. You're not trading the market, you're trading your P&L, right? And that is just, it's such a huge difference when you are backed by somebody where you're not worried about paying your rent, and you have that kitty to pay your bills and your expenses, and then you have your trading account that someone else is backing. It's night and day difference.
Absolutely, absolutely. And also when I've seen people, I have to pay a bill at the end of the month and I got to pay it out of trading, and I've only got like 8 days left and I've got to make X much money and I've got to. Oh boy, you want to talk about some bad trading decisions. I mean, you know what I mean? You want to talk about not making good decisions when you're trading because you have to, and you have to make a certain bill by a certain amount of time. You know what I mean? So with the payouts, and I'll show you on our site here. Actually, I'm going to show you right where it is, because I want everything's upfront and transparent here with you. If you're on our site, and Scott can tell you, this FAQ is actually pretty cool. You can type in just about anything you want. Well, I think it's actually right here on the main page. How do payouts work? Okay. If you go there, I actually have 2 videos I made here walking through how all that works. There's some written information how it all works. And then down here, it's a graph broken down by each different account, 25K, 50K, and so on, okay? So for the 50K accounts, for example, okay, someone was asking about this earlier. Yes, the first few months, we do have a limit on withdrawals, okay, of like $2,000 a month for the first few months. And then by the 4th month on, there's no max. You can withdraw as much as you want, okay? Why do we possibly do that, okay? Well, it'll make a little more sense to you here when we go over this trailing stop, okay? But Scott mentioned this earlier as well. Trading, Google it yourself. Don't take my word for it, or don't take Scott's word for it. Google it yourself. The retail day trading industry is what's called a triple 90 business, meaning 90% of new retail day traders lose 90% of their money in their first 90 days. It's just a fact, right? So if you're getting into this business, you have to understand that and recognize that. And should your first goal be, hey, in my first month of trading, I want to withdraw every single possible penny of profit that I can and put myself all the way down to the very limit where I'm about to just blow this account and meet the minimum threshold. Does that make any sense at all? Or should your first goal be, I don't want to be a statistic. I want to get through my first 90 days. I want to build a little bit of buffer in this account to not have to worry about any trails, any thresholds, any stops, any pullbacks in the market. I want to be able to trade a trending strategy if I want, but I still want to get some money every month, right? So that's why we have some of that set up there where a trader can still take out payouts the first few months, but your ideal goal here is to build a little bit of a buffer in there. If you want to take it all out after month 4, do it, okay? But we've had so many people say, well, why can't we get it pay out every few days or every week or at the end of every day and just take out everything? Because you're going to go right to the stop there and below the account, okay? Also, again, I always go back to the same thing. If it was your 100 grand sitting in there that you're giving to someone, and there's going to be a longer term partnership, would you want, for both of y'all's sake, to have a little bit of buildup in there? Yes, you would, and we do as well, okay? Let's see here. Let me just check a couple questions here. I think most of these will be answered here in some of the next sections. Okay, let me ask you guys a question. How many of you have ever been in a trade? Okay, so you're like, all right, I'm trading. I think the NASDAQ's going up. I'm gonna buy. And you were right. Goes up, you're up 100, you're up 200, you're up 500, you're up 600, you're up 700. You're doing good, right? You can see your live P&L, right? Boom, you're up 1,000. Man, I think it's going to keep going. Maybe I should get out right now. Maybe I should trail this profit and protect some of it. But I just have a gut feeling, and I think it's going to just skyrocket. I think it's going to keep going and going, and maybe this is going to be that big, huge whale of a trade everyone talks about, right? Then you're up 1,100, you're up 1,200, you're up to $1,500 in profit, right? You're battling yourself in your head, right? Should I get out? Should I take this profit? Should I trail my stop up and protect like at least $1,000 of this profit? Anyone ever had that situation happen where you're like, what should I do? I want to give it some room. Then it starts to come back against you. I'm up 1,500. Well, okay, now it's coming down. I'm only up 14. Okay, well, now it's 13. Now it's 13. Now it's, okay, now I'm down to 1,000 profit. But hey, I'm still up $1,000. I still feel like this is going to go up, right? Next thing you know, it's coming back down even further, right? 900, 800, 700, 600. Well, I'm still up. I think it's going to blast back up. I'm just going to hang on to it. Then you're back down to 0, no profit. Then what you're telling yourself? Well, I'm break even. I didn't really lose anything because I didn't really have that money. Now it starts to come against you. You're at -100, -200, -300. And you're like, well, I still feel like I'm right and it's going to go up. And then what do? You go and you move your stop, right? I'm going to give it some room. How many of you have ever done that? Like, be honest. You've been up a ton of money You've been up like 1,500 bucks or whatever the number may be. You've been up a ton of money, but when you close that account or when you close that trade out, you were down several $100s. And then you're just kicking yourself. Who's done that? Yeah, right, Jose? Been there, done that. We've all done it. And right? Because part of that was we were just stuck on our gut feeling that this is going to go up. The market is long. I'm biased towards the market being long. We totally didn't realize, wait, I was up 1,500. It came all the way down like 1,500, and then it went 500 more against me. You were probably so tunnel visioned on that thing. You're holding out for that bias and probably didn't realize that might have been a great short. You ever done that? So, quick question, 2 questions. First question is this: we've all done that. You're up 1,500 in profit. Next thing you know, you close a trade and you lost $500. So in a sense, you were down 2,000. Back to the whole, it's your money. You got 100 grand in the bank. You're letting somebody trade it. Do you want that person to trade your money that way? If you're going to take 100 grand of your own personal live savings, let someone trade it. Do you want somebody trading your money that way? Or do you want to create a long-term relationship with that person and have nice, consistent profits every day that slowly build and compound, right? Even if they're only making a couple $100 a day, but then they go to 2 contracts and then 3 contracts and then 4 contracts. You probably don't want somebody trading your money that way, correct? Of letting it go way up and then letting it come way back down and then go into the negative. Because what do you know is happening if that trader's trading that way? Most likely, they're most likely trading on, what's the word I kept saying over and over again? I feel the market's going to keep going. I feel like I'm going to be right. Do you want your personal live money being traded on feelings or following a strategy, a system with rules in place to trail and protect profits and manage risk, right? Let me ask you another question. After that happened and you were up 1,500 in profit and then ended up the trade negative 500, how was your head going into the next trade and for the rest of that trading day? In a good place or a bad place? A mentally stable place or a revenge trading place? Because then what are you focused on after that? All you care about is trying to get back to break even for the day, right? You don't even care if you make money. You just don't want to have lost the money for the day. It doesn't put you in a good mental spot, right? I know I've been there. Scott, you ever done that? I know I have. Too many times.
Many times.
I mean, it's not a good mental place to be in, okay? So with that analogy in mind, I want you to fully understand, and I'll show you where you were to get even more details on it. Again, when we were looking at these different evaluation plans, and each one says trailing threshold of a certain amount, okay? I want to go over it with you real quick, but then after we're done, again, if you go back to the FAQ, just type in threshold, okay? Right here, how does the trailing threshold work? I'm going to review it with you quickly, but you can go back after if you want more info and watch this video. In this video, I cover exactly how the trailing threshold works. I cover it on a PowerPoint slide. Then I switch over and I walk through it exactly how it works, break it all down with trade by trade examples on an Excel spreadsheet. Then I switch over and go into actual live trades and show it. I make sure everyone fully 100% understands how this works, okay? So if you need a more in-depth info on it after we're done here, that's exactly how you find it. Cool? So follow me through here just a little bit, okay? So we're gonna use an example of a 50K account. So we saw on the page earlier that a $50,000 evaluation account has a $2,500 max loss, a $2,500 trailing threshold. So that means from day one, when I start, okay, my balance will be 50,000. My threshold will be what? 2,500 below that. So it'll be at 47.5. Little math class here, right? Everybody following? So I go in, make a trade, and I make $500 of profit. Now my balance is at 50,500. My trailing threshold is going to be $2,500 behind that. Okay. Now, instead of my threshold being at 47.5, it's gone up to 48 because it followed along with that profit. Okay. A trailing threshold stop only moves up. Now I go in, I do another trade. I lose $100 on that trade. So my actual account balance, instead of being at 50,500, the balance is now at 50,400 because I lost $100. But my threshold is still where it was at 48,000 because a threshold, a trailing threshold does not go down, it only goes up. Does that make sense? Okay. So now let's say I'm in a live trade. The live trade goes up $600 in profit. So at that point, my balance is at 51,000. But the trade comes back down against me, goes down $100. So I only close it with a $500 profit. Okay. So my account balance is now at 50,900. But my threshold is going to be $2,500 behind my highest balance while in an open trade. So let's just stop here for a minute. Let's go back to the analogy that I used a few minutes ago. I think NQ's going long, I buy, it goes up 100, it goes up 200. I'm up $1,500. My trailing threshold followed that up while in that highest point of that open trade. Does that make sense? If I let, and again, a trailing threshold only goes up, it doesn't go down. So if I let that trade go way up in profit, $1,500 in profit in my direction, my trailing stop threshold followed up $1,500. Okay. Then I let that trade do what we talked about earlier, come all the way back down $1,500, back to zero, and then let it go down another $500. Okay. Well, I just ate up like $2,000 of that $2,500 trail. Does that make sense? That might be a little bit of an extreme analogy, but it's like we talked about. If you're putting your own live money in front of someone, do you want them trading big, wild swings like that? Okay. As we talked about earlier, we don't have a ton of rules. We don't have a big long list of rules that are going to make someone fail their account. We don't have all the fine print. We have just very simple rules. This is really the only rule we have that you've got to stop and say, okay, how do I get around this? How do I make this work? How do I make sure that I choose the right size evaluation account to give myself a big enough threshold that fits my strategy? And how do I make sure I can prove to Apex during this evaluation that I can stay in these parameters of being a consistent, profitable trader to stay within these rules? Now again, this is based off the 50K and 2,500 max loss. You can get 7,500 on a bigger account, okay? So does that make sense in a nutshell how the trailing drawdown works? Also, we explain this up front. We're very transparent about this up front and about how it works. So is there a little work involved with saying, okay, I got to make sure not to do too many contracts where it pulls back against me too much? Okay, I can do this. I can do this for a few weeks, no big deal. What does that kind of prove you can do? Well, if you can't do it, even knowing up front exactly how it works and knowing that's the rule, are you able to, and how are you able to manage when the markets throw things at you? Because we know the markets are going to throw things at you every day. The markets are going to change up every day, right? Okay. We do not have a daily drawdown. A lot of companies out there will have something very similar to us and say, oh, you've got a $2,500 max drawdown, but you can't lose more than 500 of it in one day or you're out. We do not have a daily drawdown. It's just an overall total trailing drawdown. We don't add other drawdowns. Some companies say, well, you can't lose more than $250 in any single trade, or you can't lose more than $500 in one single day, or you can't have a trailing. We don't have those levels to it. It's just a simple, set amount trailing drawdown, okay? Unrealized gains, okay? Just like I explained there, at the highest point of profit in the trade. Now, once you pass the evaluation account and you move over into a performance account, your trailing drawdown stops at $100 plus the starting balance. What does that mean? Well, if you had a $50,000 evaluation account and you passed it, then it switched over to a $50,000 live account, you'd start the same. You'd have $50,000 balance, and your initial trailing stop would be at 47.5. But as soon as that trailing stop gets up to 50,100, it stops right there. Because all we care about at that point is protecting what? The $50,000 of funding money. So once you're in a paid performance account, you don't have to worry about that trail constantly following you up, okay? Now, would you want to go ahead and build a little bit of buffer above and beyond 50,000 to give yourself some room in there so that way you could trade whatever strategy or system you wanted to without getting close to that bottom number? Of course you would, but you don't have that trail past that point, okay? So guys, that is how we differ. I think we've gone through a lot of that there. Scott, I know we're way over here. We've gone on and on. I think it's been some good info. But that is how we're different. I'm gonna go pretty quickly through these slides because we've pretty much talked about all of this. The difference of companies out there that are just trying to get fees from you versus given an actual opportunity to trade. Instruments you can trade, the equity futures, bonds, notes, energies, the ags, the metals, and the micros, okay? Multiple accounts. We do have customers that like to trade multiple accounts. They'll have multiple evaluation accounts and multiple paid performance accounts, okay? How and why would you do that? Well, it does help spread out risk. It does help with some mentality. I'm not going to spend a ton of time on this just because we're running low on time, but if you do go to let me just show you real quick where you can find info on this. if you do go to our site here and go under tools, you'll see a quick video there about a trade copier, which only works on NinjaTrader 8. If you place trades in one account, it'll copy those trades over to other accounts. Okay, so some people like to have multiple accounts, and so on there. So, Scott, I know there was a couple of things you wanted me to touch on before we finish up here with the offer. I know I talked about some of those. If you can remind me or let me know anything particular we want to cover here.
Yeah, the one main question I had that is confusing to me, where, so I qualified, got the PA account, the live account, and then I'm looking at so I trade directly through Rhythmic. You can open up Dome straight through there. I just find that easier, especially for all the stuff that I have on my computers. But on the Rhythmic Domes, now that I'm live, it still says paper trading account. And I didn't understand if you guys are paying out. So say, I'm up $3 grand right now since I started this paid account. If I go up 10 grand, like that's what I'm not understanding as far as I'm obviously not live, and I did read the reason you do that, which is very smart. Once people switch from a paper account to a real account, they tend to lose, which I understand. But if I understand it correctly from you guys, it doesn't matter on our end. So if I make 10 grand, even if it's on paper or whenever you guys switch it over, I still get paid the 10 grand after the 25 days, so on and so forth. Could you talk about that, what that means? Because that is pretty confusing when you look at your domes. Like, wait a minute, I thought I was live.
Right, absolutely. Yeah, and we do address that, like you said. You might have saw it in the PA agreement. Yes, most of the time when someone passes an evaluation account, they're immediately put into the paid performance account within, you saw how it works. As soon as you qualify, the next day you get the email, you sign the paperwork, it's active, like within a day. And you're in that, what we call a paid performance account, which is, where the split starts. Yes, just like it states in there, 99% of the time, that is set up in a virtual account, which is still a demo account to start off with, because like we said, and you brought it up, we've all been there. And I'll be upfront with you guys here, very transparent. Trading, like we said, is a 90-90-90 thing, okay? And we still see that 90% of people that pass the evaluation account, move over into a paid performance account, 90% of those people may not still meet the rules and might lose that account within the first couple of weeks. Because for one, that's the nature of the business. But for two, it's a whole different mental beast there, isn't it? Just like we've all done before. We do great in some. As soon as we go over to live money, we don't trade the same, okay? So yes, any profits that someone does make in that account is fully paid out to them, okay? We also do, as you saw in the agreement, we have the right to copy trade into a live account from that virtual PA account. But normally what happens is after somebody's been trading, like they pass the evaluation account, they go into the PA account, okay, into that second month, all right, this person's got it. Like they handled the switch, they handled the mental side of it, they're being consistent, they're still following their rule, okay. That is when we normally reach out and would say, okay, hey, things are doing good. We're going to move you over to some new credentials here for you to manage an actual live paid account. That at that point, like what you're talking about, then DOMs would match up and so on. Okay, so that's normally the process of how that works. But yes, any profits that are made in there during that time are fully paid out, fully counted towards that full balance. It's just a matter of that transition period to make sure that people can manage the switch.
Right, and that's on you guys, right? That's for you to determine. Guys, like for instance, I don't have to worry. I'm up $3 grand. Say after the 25 days, I want you to pay me 2 of that because you only get paid $2 grand, right, every month, whatever you said. I don't have to worry, hey, I'm still on paper account. That's up to you when you want to switch me. I just got to worry that I'm profitable and you're paying out, correct?
Exactly.
Okay.
Exactly.
That was confusing. I'm sure other people were confused about that too. Again, I didn't read as much as I probably should have. You probably explained that in the videos, but thank you for clarifying that. That's the main question I have. I mean, if you want to answer some of these questions, I don't know your timetable, but if you want to answer some major ones, it's up to you.
Yeah, let me see. I think some of them we ended up answering in the next section. Let me just look at some of these more recent ones here. Do you need to close positions at 1616? All positions need to be closed by 4:59. So we want it closed before the market closes at 5.
Right, that's
Okay.
Eastern. They've expanded Globex. It doesn't close at 3:15 Central anymore, 4:15 Eastern. It's now 3:59 Central, 4:59 Eastern. So
Right. Yeah, there's like 15-minute period in there. It's closed like 4:15 to 4:30, and then comes back on some of them. But yeah, it's the 5 o'clock close we're worried
Right,
about.
and you can just, you can just and this is another thing, and I remember from the one that I did back then, you couldn't even, they may have changed it, but you couldn't even trade overnight. Like you were out at 3 o'clock Central, and you couldn't start again till like 5 o'clock the next morning. So that's another thing. You know, some of you guys are in Europe, some of you guys, hey, there's this day and age, there's some very good trading overnight. So you're allowed to do that just as long as you don't have a position on from, you know, if you got to close out and you can get right back in at 5 o'clock Central, 6 o'clock Eastern, and get right back in the position, right? So you can trade all night as far as I know, right?
Yes, sir. Yep.
It's awesome.
Yep. Trade all night, just close there from 5 to 6. So yeah, very good question here. I didn't get to address that as far as transaction costs. Transaction fees, commissions, and all that are all based on what the fee and commission structure is that you would see on the NinjaTrader website for their lifetime license. We do not mark up transition. We do not mark up transaction fees. We do not mark up commissions. We make no money on that whatsoever. Okay, that is a cost of trading that comes out of the net profit of the account, just like any trade would. But those are the same exact fees that would be listed on the the NinjaTrader license fee that you would see there. We don't mark any of that up or make any money on that. No, our only money is made on the front side of valuation fees and resets, and on the back side of a 10% split with the trader. Okay.
What is it around turn? Is it like for an E-mini? Is it like $3.80 or $4 or something?
It's pretty, right under $4, I believe,
yeah,
$3.90
exactly
something.
what you pay at most brokerages,
Yeah, it's the standard fees. None of that's marked up. We don't make anything on that. So. What brokers do you use most as far as the actual live accounts? Vladislav, I don't know if I'm saying that right. Through Ninja.
Call Vlad in my room.
Vlad, there we go. NinjaTrader brokerage. Let's see here. Vlad is okay. The PaperTrader Live Sim account is marked up on fees as it is free. No, you can set those to the exact same fees as they would be. We actually have videos showing you how to do that so that the net profits line up in Rhythmic and in your Ninja or whatever platform you're using. Garrison says, so it sounds like the static account is the best. What are the downsides to it? We were just talking about the trailing drawdowns versus that one account we have that's static. Now, if you just take a minute and really understand how that trailing drawdown works, and you realize you only have to worry about that really during the evaluation and then when you're starting in your live, if you just understand how it works, and by the way, when you're trading with us in our trader, it's right there in front of you. It always shows you exactly to the dollar where that trailing threshold is. It's not a surprise. It's not something that jumps up on you and bites you like a snake out of nowhere. You didn't see it. It's right in front of you. And you just have to be able to plan around it and trade ahead of it or make sure you choose the account with enough size, okay? But on the static, basically, you start off at a $100,000 balance. Your stop is $625 below that. So it's at what, 99,375? And then that never moves. It doesn't go up, it doesn't trail, but you know, you are limited to 2 contracts on this particular one, okay? So it just really depends on what you're trading, okay? Now we have some people that are like, I like that, and you know, I'm gonna use the copy trader, and I'm gonna have 5 of these accounts. So I can basically do 10 contracts anytime I want, don't have to worry about, that's totally up to you, okay? So that's totally up to you.
Yeah, I mean, even with the static, I mean, people may look at that and say only 2 contracts.
Right.
I mean, technically, if you're following the risk rules that you should, that I talk about every webinar that I do, if you have a $100,000 account, a $100,000 account for most of the volatility that's been going on lately, the most you should have on is two E-minis. And you guys see me trade NASDAQ. I only put 1 NASDAQ on, and that's with a $100,000 account. So that is not a bad. I mean, yeah, it's real easy to lose 625 right off the bat, but if you can build that up, then then you can just trade it like a normal account. It's not a trailing 625, but two lots is, you guys watch me every day. That's basically all I put on, right? You can make $2,000, $3,000, $4,000, per trade, as you guys see, with 2 lots. So that's not that. If you're putting on more than that, you better be careful, because you could easily blow out any of these accounts.
Well, and I mean, Scott, let's be real. I mean, why do most traders fail? Why do we have traders that have to reset this account over and over again?
Over trading.
Over trading. I'll tell you why. Because $50,000 account, for example, you can do up to 10 contracts. Should you? No. Because you get in here and you say, I only have to trade 10 days and then I can get funded. So I want to do it in 10 days. Actually, I want to do it today. So I'm going to go in on all 10 contracts, and I'm going to try to ride this market up, and I'm going to try to get to that $3,000 profit today. And then for the next 9 days, I'll just go place a quick little micro trade to say I traded, there's my 10 days. Okay, well, 10 contracts can pull back against you pretty quick. And oh, I hit my drawdown. Well, let me pay the 80 bucks and I'll try it again. Oh, I went in on 10 con. I went on to, guys, be smart about it. Okay, this is a long-term relationship we're trying to build here. I'm not telling you this to tell you to drag it out for months so that you keep paying me this monthly fee. But let's just get real here for a quick minute, okay? Scott, help me out with this math. What do we have on average? 20 trading days in a month, right? Like, yeah, 20 trading days in a month. So on this one here, your goal is $3,000. So that's what? 4 weeks, $750 a week. It's $150 a day of profit goal for you to pass this in a month before you have to go and pay another fee. So how about be smart, take it easy, be consistent. I mean, do you understand what I'm saying there? I'm not telling you to drag this out and pay us more fees. Take the whole month. Don't try to do this all in an hour.
Yeah, but what's great about that as well, sorry, I didn't mean to interrupt you, is you have the option though. So if you have a trade, most of these other, again, when I was in it, I remember it was like a 3 contract limit. So doesn't mean you want to be putting on 10 contracts if you're trying to qualify, but say you go live and you're building your account and now you have a trade that you put 3 on and it goes in your favor and you get another setup. We talk about this in my room all the time, where you get, you can, based on the new setups, you put on another brand new trade, like it's a new trade, trail your stop. At least you have the option here where you can go, say you got 2 on, and then you get another setup, another 2, another 2, another 2. So if it does draw back and stop you out on the last setup, you're still up a little money, but if you catch a runner, you can make some serious money. You're at least getting that option here, right? So it doesn't mean you want to put on 10 contracts, but you have the option to do that, especially if you're in a running trade. That's an incredible advantage, especially once you go live. You probably don't want to be doing that, in the tryout. I mean, you could if you got your runner, but the point is you have the same exact parameters once you go live. So you always have that option, that's great, in my opinion.
Absolutely. And so, I mean, that's the biggest key I can tell you of how to pass this thing. And what I see about people that don't pass it, or people that have to reset, it's like I talked about in the beginning, it's back to that trading mentality and trading psychology and being disciplined and, I have an opportunity to get funded with real life. Guys, you can get funded with $50,000, $100,000, $300,000 account. That's life-changing. That's a huge deal. Just, it's okay to take a month to do it. You know what I mean? It doesn't have to be done in a day. And if you break it down like that, on this particular one, you got to make $3 grand, $150 a day. You've passed it before month 2 before you pay another fee. Does that make sense? Like, take it slow and easy. Only do 1 or 2 contracts. Follow a system. Be consistent. Okay, like that is the key. Like, that is literally the key. So, all right, so real quick, special offer here. I'm going to go ahead, Scott, and I'm going to put in a couple of links here into the chat for everybody to see. Okay, so sent you a link there, special link to go to. I'm going to go to that link as well on my screen so that you can see it, because it's pretty much going to look like, let me just show you here, Scott, and I'm not sure if you saw this either, but so guys, you see my screen here? This is the site I've been showing you, right? Okay, and you see the prices. But if you go to the link I just sent, all of a sudden you're going to see a little something different here that gives you a coupon code right there. But hold up, and actually shows you the coupon code right here below each and every one, so you don't forget it. Okay, so once you go in here and figure out which evaluation plan you want, go ahead and click Start Now. In the checkout process, there's a coupon code section, and you'll just enter Pulcini 50. What that's going to do, hold up here, what that's going to do is give you 50% off, not just your first month, but also any recurring months you might have that account for. So if you need a little more time, you didn't quite pass it your first month, so it's 50% off the first month and 50% off on ongoing months. Now, Scott asked me to do a little something better for you guys that actually took the time out today on the webinar. So this coupon code, Pulcini 50, from now until tonight at midnight Eastern time, okay, it actually will work for 70% off the first month, and then 50% off on all recurring months, okay? After midnight tonight, it'll be 50 and 50. 50% off upfront, 50% ongoing. But from now till midnight, it's already set and coded to give you 70% off the first month, okay? And that's good for up to 10 accounts.
Is that midnight Eastern they're asking, or?
Yes, sir, till midnight Eastern, Tell you what, I'll leave it on for you till tomorrow morning when I get in. How about that? I'll just move it over till now you guys have to do me a favor though. I'm gonna upset a lot of other people if they know I'm doing this for you. So don't be out there posting it all over social media and telling everybody else. Can we make that deal together? And I'll extend it for you till say like noon tomorrow. Is that good, Scott? That way you got a little time to promote it in your room in the morning. Does that help?
Yes, very helpful. Appreciate it.
Okay. I don't mind doing that for y'all. I want to get y'all the discount.
You may do another one for that.
Yeah, I just don't want to get, get in trouble with a bunch of other people. Can I have that? No, this is a special deal for, Scott and his group. So if y'all just promise me to keep this within your group and within your room and not out everywhere on social media, I'll leave it active till like noon Eastern tomorrow. That way you can let everyone in your group know as well. So that gives you 70% off first month and 50% ongoing. So it's guys, it's really hard to beat. I mean, like on the $50,000 account there, normally those are, $167 a month. I mean, it's like $50. I mean, try it out, $50. Okay. Let's see here. Fox, you have to talk to Scott about that one. So, but there it is for you. Use coupon code Pulcini50 at checkout. 70% off the first month. That's on any evaluation account. Okay, the discount applies to the evaluation accounts. Does not apply to reset fees or PA accounts, but it's
Well, explain to Jen that once you get the PA account, you don't pay you're paying the $80 a month. You're not paying this anymore once you actually.
correct. Yep.
Yeah.
Yeah.
So hopefully that makes sense. Like you guys asking, is it 50% ongoing, including when you get the PA account? It's 0%. It's 100%, I should say, because you're not paying it anymore, which is awesome. You're paying $80 a month, and again, that covers the fee, the data fees, and all that stuff. I mean, guys. Again, I wouldn't be doing this if it wasn't legit and incredible. Again, I'm doing it. So.
Yeah. And guys, I know we went way over here. Oh wow, we went a long time.
I'm glad you're having fun.
Yeah. So guys, I tried to answer as many questions as possible and really be upfront and transparent with you about everything we're doing and how it works. And again, to give you some education there about when you're, whether you're looking at us or any of these other companies that are out there, those are the questions to ask yourself. Those are the questions to look at of what are the rules? Why are they there? Is this just about fees, or is there a true path to trading here? And make it make sense. And only thing I can leave you with is this: I'm not saying this out of fear or to scare anyone, but you've all seen the news. You see what's happening in the world. You see what's happening in the markets. You see what's coming down the lines here with, gas prices and food shortages and food prices. And, it's a smart thing to think about of hanging on to your own money, risking someone else's, And I think you mentioned that earlier too, Scott, and I think that's a very smart thing to look at, especially when you can give it a shot for 70% off. So try it out, guys. So look, I'm gonna let you guys run. Again, if you have any other questions, literally if you go to the site and you go to the FAQ here, everything you could possibly want is there. Everything as far as how do the payouts work, how does the trailing stop work, the rules, everything you could possibly want is right there. Otherwise, just hop on over here to the help desk, shoot us a quick question. Help desk is literally there around the clock, even overnight, to answer questions. So we're here to help. Let us know if there's anything we can do for you, or any other questions there. Okay, Scott, thanks so much for having me on, bud. I really appreciate it.
Yeah, thank you. Just one quick question. Could you choose your start date? I'm assuming once you sign up, that's when the clock starts ticking as far as your evaluation and everything else, right? You can't like postpone it for 2 weeks out or whatever, correct?
Yeah, once you sign up, that's when the system will set up the next 30-day charge. Now, you're not required to start trading by any particular time. You don't have to trade on it day one or anything like that. But as far as when the recurring stuff starts, yes, that is based on when you sign up there. And keep in mind, guys, after noon tomorrow, that coupon is still good for 50%. 70% is great, but it's still good for 50%. And that coupon is good through the end of June. Okay, so you do have a little bit of time. You only got till tomorrow at noon on the 70% first month, but you know, to get the 50, that coupon code is good to the end of June. Okay, up to 10 accounts. You can get up to 10 accounts with it. So.
Yeah, that's awesome. Again, I have 3. I've got 1 live and 2. You know, again, I'm working on different strategies, and if I get funded, that's even better. But I don't have to risk my own money to work on strategies. You know what I mean? And it really, I mean, pretty sure the strategies work. That's why if they work, I want to be funded, right? Because I can do strategies in anything. But I mean, it's just a little skin in the game, and that's, you know, that's what I'm trying to explain to you guys. I mean, you're going to trade differently. Even though you think it's paper, you still have money on the line, and you're going to trade properly as far as risk, I would think. So, but John, thank you so much for doing this.
Sure.
Appreciate it. We'll be reporting when I get my first payday from you guys. to the
Nice. Love it. Love that. Yeah, I mean, you can hop on. You know, we've got a Facebook group page. We've got, you can find us on Trustpilot as well. Plenty of reviews there about payouts.
That compares all the different funding sites. I don't remember what it is. You can Google it, but you can see by far Apex is the best. I mean, again, I wouldn't be doing this, guys, if I didn't believe in it. So, and personally doing it.
Well, all I can tell you is this: the one biggest thing that hurts any funded trader company is when they don't pay out. So I assure you, we pay out. You can go look at the reviews. You can go look at, yeah, we do have a good rating, and we do everything we can to keep that. So, all right, guys, I'm going to get rolling here on my day. Thank you so much. If there's anything we can do for you, hit us up in the help desk. We are here to help. Look forward to having you. Thank you so much.
Appreciate it. Thanks everyone for joining. I'll see you in the trading room, hopefully. Thanks.